Finally, taking a look at Microsoft shares closing the day in the red, off just over 2%. UBS warning of further troubles in the cloud sector. Analyst Carl Kirsten saying that he wrote in a note to clients that, quote, customer efforts to optimize or trim their cloud spend will be deeper and last longer than most think. Now, key cloud companies lagging behind today, along with Microsoft, Amazon, Alphabet, Snowflake, all moving to the downside. Weakness in the cloud was something we started to hear about during last earnings season, Josh, when we started to see some of these larger names post smaller growth numbers. That was clearly a concern there for analysts at the time. It looks like it might be a little bit longer of a runway here until we start to see things turn around.
UBS talked to over 20 different large consumers of these products, and I thought it was interesting to see that they had seen more of a tick down since they last talked to them 3 months ago. You noted that AWS and Azure, we had already seen a slowdown. So to continue to see that slowdown will be interesting to see how that translates to earnings in a couple weeks. Their specific point on Microsoft I thought was interesting too, Shauna, talking about just the Microsoft stock price we're showing there, up almost 20% year to date. And their argument for Microsoft basically being that AI unit is already priced in.
Yeah.
So you already have the price in there with that 20% bump. Now you're looking at Azure, which was sort of the growth story before, and that might be slowing down. So then what does that mean for the outlook of Microsoft? It gets a little bit murkier when we get outside that AI hype train, although it is pretty exciting.
It is exciting. I know AI was certainly the buzzword of last earnings season. We'll see whether or not that's a tech buzzword of this earnings season. You got to think a lot of these companies are going to be mentioning that quite a few times, right, Josh? Great job. Thanks so much.